Welcome to my channel. Equity funds. These funds invest primarily in equity stocks or shares of companies, with the aim of providing capital appreciation over the long term. Equity mutual funds are principally categorized according to company size, the investment style of the holdings in the portfolio and geography. These funds aim to provide capital appreciation over the long term by investing in a diversified portfolio of equity securities. A fund for everyone. Equity funds offer a wide range of options to suit the preferences and objectives of different investors. The variety of equity funds available allows investors to customize their investment portfolios based on their risk appetite, investment goals, and sector preferences. What are different categories of equity funds? Large cap equity funds invest a large portion of their corpus in companies with large market capitalization are called large cap funds. This type of fund is known to offer stability and sustainable returns over a period of time. Large cap tend to be less volatile than mid cap and small cap stocks and are therefore considered less risky. Mid cap equity funds invest in stocks of mid-size companies, which are still considered developing companies. Mid cap stocks tend to be riskier than large cap stocks but less risky than small cap stocks. Mid cap stocks, however, tend to offer more growth potential than large cap stocks. Small cap funds invest in stocks of smaller sized companies. Small cap is a term used to classify companies with a relatively small market capitalization. The risk of failure is greater with small cap stocks than with large cap and mid cap stocks. Multi-cap equity funds or diversified equity funds invest in stocks of companies across the stock market regardless of size and sector. These funds provide the benefit of diversification by investing in companies spread across sectors and market capitalization. They are generally meant for investors who seek exposure across the market and do not want to be restricted to any particular sector. Thematic or sector equity funds. These funds invest in securities of specific sectors such as information technology, banking, service and pharma sector etc., which is specified in their scheme information documents. So, the performance of these schemes depends on the performance of the respective sector. International funds. These funds invest in stocks of companies listed in foreign markets, providing exposure to global markets. They are suitable for investors seeking diversification beyond domestic markets. Index funds. Index funds replicate the performance of a specific market index. They are suitable for investors seeking broad market exposure and are generally low-cost options. These are just a few examples, and there are many more equity fund options available in the market. Investors should carefully assess their risk tolerance, investment goals, and time horizon to choose the equity funds that align with their specific requirements. Thank you and love to hear your feedback in the comment section.